Hi, it's Tyrone here. Welcome to another weekly market analysis. What I've done for this week is I set all the charts up here, plotted all the counter trend levels just for observation purposes, and also put all my orders in at the levels that I don't mind taking at the extreme. I'll explain as we go along. So I'm going to start with the Aussie CAD, the first pair right here. And what I'm going to do, and I'm going to show you this so those that use MT4 who had this problem drawing levels and then they vanish when you go up a time frame, I'll show you how to eliminate that. So if I look at the monthly chart, the first thing I've done is drawn in my supply level because we've got a close below the pivot point. And if you don't know what I'm talking about, watch my previous videos on the pivot candles, the pivot points. I call them wicks sometimes because the wick to me is one when we've got a close either side, like this candle and this candle here, and we've got a pivot point, a lower low or a higher high than the two previous candles either side. So that to me is either wick, pivot point. You know, I call it a number of different things just because that's the way I understand it. And if you understand what I'm talking about, then everything will be fine as well. So let's just go to the monthly chart here. There is a supply level that I'm interested in selling, but when I use the monthly, I drop down and plot daily levels. Okay, if I use the weekly, I plot 240. If I use the daily, I will plot 60-minute levels. So I'm going to use the daily as an example in a moment, but what I've done on the monthly, I drop down to the daily, enlarge this chart, and then find the levels that I'm interested in. Again, see other videos on this. So these are the levels that I'm really interested in trading, and I'm just going to adjust slightly this level. I need to put one more level in here, which is right there. Now these levels are all inside the higher time frame monthly supply level for my strategy. Might not be a supply level in someone else's. Okay, and if you watch again previous videos, you'll see that these levels, they work about 50% of the time. They're not the be and end all. The idea is to have an edge in the market. So you're going to have losses, but when you take trades, you've got the confidence that they're going to work out, that you stick to the plan. So this is the big monthly level. This is the extreme level. Not the best one at all, but price did drop away from this area. So you could say that this is the whole level. And what I normally do is put a set and forget at the extreme, but we've got so far to go till we get up here. I don't think I have to worry about it this week, but I've got an order down here on a weekly. I'll show you in a moment. But what I do is I go up to the monthly first of all to draw these levels. I look at the monthly, I get my drawing tool, I draw a trend line like this, as small as I can, nice and straight, and then when I go down to the daily and enlarge the chart, I will then drag it on to wherever I need the level. Let's just draw a level down here, for example, and I use the control. As I push the control down and click on there, I can copy these as many lines as I like just by holding the control and then clicking on here with the mouse. So I'm just going to delete those. We don't need those. But what that enables me to do is go up to the monthly and see the levels, because let's just say I'm on this daily. It might work, it might not. If I draw a line in on this daily example, we've got a line here. Let's draw this level in on the weekly, and if I go to the monthly, you can see it in this instance. Sometimes though you won't see it. I'll probably show you a better example a bit later, but sometimes you won't see the line. So if you go to the monthly, draw the line first, drop down to the lower time frame, and then put the line where you like and copy it, then you can see where these levels are coming into force on this monthly. Now if I drop down to a daily, what I really want on this monthly is to look also for divergence or some confluence, some entry signal. So what I'm going to do is I'm just going to add on here, I'm just going to come up to this right hand add button here and add an oscillator, which is the CCI. Now all my back testing, I've used many instruments before, many different not instruments, but well, over different instruments, but many different tools for this, for divergence. You can use the MACD. To me that's a little bit slow. I prefer using this CCI. It gives me very accurate from the pivot points or the wicks, the candle pivot points here. I'm always using the divergence with that, so I'm keeping it very systematical, you know, so I'm not trying to look at all different types of divergence and get confused. I try to have a relation between the divergence and the pivot points, and only take those sort of levels. So that keeps me out of losing trades. I miss some good trades, but again, there's other entry techniques that if you miss, you can try and get in on a trend, and I'll talk more about that on another video. So this is how I draw the levels in on the higher time frame that they show on the higher time frame. Okay, so these are the these are the daily levels within the monthly. So when price reaches this grey area, providing that I've not created any other pivot point on the way up that I take out, for example, this is a pivot point in the weekly. If I break that, I can't look for any weeklies above, but I have to wait for this monthly. Then I would start to drop into the daily, and then I'm waiting for some form of divergence or some new daily level to perform for a pullback if I miss it. And you can have set and forgets at these areas, so you're taking low risk. So let's say as an example, I have a valid target in this area. I'm just going to come back to the monthly. Yep, solid candle there, red one. That'll be my profit margin. This is not again for trend following on the monthly. It'll be trend following on the daily 240 or the 60, but not the monthly. So price rallies into here, and I know that I've got a set and forget. I've got a 50-50 chance of this working. I think, hold on, my risk is going to be about 60 pips to make 300 odd, yeah? So it's going to give me almost a 5 to 1. Now if I take all these levels at approximately 60 pip risk, I can lose 180 pips in the end. Okay, then I have to wait for another level that might give me the same 5 to 1, and again I might lose another 180 pips. So I've lost more than what I would make over two levels. But if I have two levels that work equally, I might have lost here, here, and gained here, which means again the pips that I've lost are now getting into 400. What was I looking at? Let's have a look here. 160, 320, 440 odd pips. But if I win on this one, that means I've already made back 300 odd, 360 pips. I'm still down, and if I trade another level that should work, because remember I've had two losses, two wins, on average 50-50 in these higher time frames, then I'd start to be in profit, because then I'm also going to be up 300 minus whatever I'm down. I know this sounds confusing, but minus the levels that I've lost, I will be in profit. Not by much, but that's the edge in the market that I'm trying to explain here, how it works. What I'm trying to do though is not take every single level, not put a set and forget on every single level, look for confirmation using divergence, put a set and forget on the extreme in case price does rally, because then I'm getting a much bigger reward to risk. So let's say price does keep rallying through here and I'm not got no divergence, so I've not traded, and I have a 120 pip risk to come down to 500. I'm still just getting a 4 or 5 to 1, but I've eliminated some losses, if that makes sense. So the idea is to always keep your risk low, and you must go for your target. If you don't go for this target, you know, then you're going to lose as well on the long run. You have to have strict rules when it comes to this kind of methodology. So I just wanted to explain that, how I'm setting these, or how you can set the charts up, and look at the levels on the higher time frame. And let's go for the weekly then. Have a quick look at the weekly. Enlarge this weekly level. If I drop down to the 240 and enlarge it, there's my 240 levels that I'm interested in trading. Also I have the extreme. I've not drawn it in on here, but I'm just going to copy that line. We have a level on top of a level. Okay, so really this level, this is where I'm really looking to catch the turning point. Now the reason I draw these levels in, these strong moves away from the zones that are based, okay, is because one, I can then look, especially on the 240 minute, what time these levels are created. This is London right here, this one is outside of London, not as good, and this one is London / New York that pushed down. So I'm interested really in this bottom level and this upper level. You know, so I could then just get rid of this line, and then these would be the two levels that I'm interested in. And why I'm interested then in them particular levels is because I know where I really want to put my stop above. Okay, so let's just say price comes up here, and if I put the divergence on here as well as an example, let's say price gets close to here, and I don't get any divergence, I might not want to take that level. Or let's say I do get divergence and I just touch the level and it drops, I get a divergent signal and I buy round about, or sell should I say, round about here. I then work out my reward to risk by putting my stop either above the pivot point of the candle, but if I'm close to one of these levels, I want it really about sort of 12 pips at least on a 240 minute above this level. Okay, so my stop's going to be somewhere here, and that means if I would have entered here and I got a target down here of 220 odd, I've got a risk of about 65. So you can start to work out your reward to risk. As a rule of thumb, you want really 3 to 1 minimum. Okay, you really want to be going for something like 3 to 1. If not, what you would do is either take a gamble by reducing your stop. That's the only thing you can do if you really want to take that level, or have a pullback into the new 240 minute area that's created. So if you've got divergence, it's telling you want to sell there and you don't want to get in because you've had a strong move away. Wait for some kind of pullback, maybe put a set and forget, so that if it pulls into that area, don't worry about whatever levels are created. You've already had the signal to enter, but as long as your stop's above the nearest sort of level, that's the safe way of doing it, and probably the most profitable way on the long run to do this. So I hope that kind of explains a little bit. So, and I'm putting this in the weekly market analysis because I'm not making a complete video of this, because those that really want to watch this sort of stuff and learn, this is where I'm going to start getting down to the nitty gritty and slowly show you how you can add in mechanical rules, written rules, and build this strategy for yourselves. Because I said there's so many variables you can add following 100% rules because of them entry triggers. Okay, but divergence to me is a very good way on this CCI for keeping out of bad trades. The downside is you might miss some good ones. The flip side, you're going to save yourself a lot of losses. And so I kind of flip between the two. That's the only, when I say I can't stick to 100% rules myself, I've mentioned that before, is because if price reaches this area, I've got no divergence. When it leaves, I might have a sell order, a sell stop order. So when it breaks down here after 10 pips, my stop's 20 pips above here, so I've got maybe a 50 pip stop. I will get into the trade. Okay. There is another way of using Bollinger Bands. When we used to trade on Online Trading Academy, it was the all-star method, that was cool, but I don't like that. I prefer this divergence, or just to literally, once you're out, take it. And that all depends on, as well, on the quality of this level. If I do that, you can add further rules and further rules just to get down to the nitty-gritty entry technique, which stops you missing lots of trades as well. Let's have a look at this daily then. Let's say I just want to short. Let's say the market is just going to keep dropping. We're in sync with the monthly's down, the weekly's down. Maybe we don't quite retrace this high and we need to find some level in this daily. Now, if you look across, the daily is the weekly, by the way, and you can see I've also got an order at the extreme in the weekly. But let's say price, let's just drill this out a little bit. Let's say this area, this whole area here, price might not reach here, so there might be another level in on that daily. What I'm going to do before I drop down is draw my line on the daily, first of all, like this, and then I'm going to drop to the 60, enlarge the chart, and then have a look across to see what levels I've got. This is the first one that draws my attention, this little level right here. But because we've got kind of a pivot point above, right here, that's how I would probably draw the level. Now, as you can see, I've got an order up at this extreme, and I'm going to look at this is the 240 slash weekly high point here. There's an 8 o'clock move down here, so I like that. There is a 6 o'clock in the evening in the UK here, bearing in mind this is GMT, which is, this is literally the afternoon, coming into the afternoon of the London session. So it's not too bad, but it's kind of getting outside that zone. But if we come back, this whole area was formed around London slash New York before it dropped after the New York afternoon. So it's still an area that's of interest. Here's very, very scrappy. You see there's far too many levels. We've got a level outside. I'm going to draw this in on the 60 minute just to show you, if we go up a time frame, how these levels might not show. I'm not going to trade, I wouldn't trade this level, but I just want to draw that in. Now, if I come back to the daily, if I go up to a weekly actually as an example, oh, it is showing. Fantastic. You know what? Makes me look a liar. But you'll see if you try this yourself, you go down to a 60, put a level in, you might find it won't show on a higher time frame sometimes. It is a little kind of bug I think MT4 have got, even though you're showing, if you go into the trendline properties, if you go in visualization and you put show on all time frames, sometimes it doesn't show on the higher time frames. That's what I'm trying to talk about. Right, so there's a level there on this daily. We've got obviously the pivot point here right above this zone. Obviously I want to take the extreme, come back to the daily, and that's where you'll see the levels. And then what you would do again is when it gets close to that is watch the 60. If you want a confirmation where price reaches, leaves one of these levels, leaves, and put a stop order to sell. Watch divergence first. If you're not got no divergence, don't put no stop order. Don't put if it looks like, another interesting thing I look for, if I haven't got divergence but it looks like it's being created. As an example right now, this little pattern here, and I'm going to enlarge this. This is divergence happening right now, but it's in the wrong place. You've got this couple of basing area pivot points, which is pretty much where we're on the high and turning. So this is to me a valid divergence setup, and then we've got a red candle pretty much being created now. So if you see that inside the level, that's hit the level and that's coming out, that's a sell order for me. Or what you might see is this. You don't even see the red candle, you see the green candle shooting up into the level, but you can see you're nowhere near the same height as the CCI high, which is creating divergence. That's also another sell signal for that level if you want to put a set and forget. So if you see this kind of, if I come across here, I want to show you something. If you've got this kind of scenario, if you look to the hard right edge, and then price does this on the, it's basing here, but this is dropping, and then you've got a little level above here, I'd probably put a set and forget, because if price spikes, this doesn't look like it's going to spike above this high. So when you get that spike, that is be the entry into a level, as an example, okay, providing it's in that higher time frame in this area. So I'm going to get rid of this one because I'm not interested in that level anyway. It's not a level that I would draw in on the daily 60 anyway. But I hope you get the point there. That's what I'm looking for. These are the confirmations. Now I'm not always about, because I'm a long-term trader, so I tend to stick to these higher time frames, and you might only get 2 levels a year on a monthly, and you might lose on both of them. You might get 4, 5, maybe 10 on the weekly, and you might lose on half of those. You know, so this is about long-term for me, about growing wealth, and I need to have a strategy that consistently makes money over years. I'm talking 15, 20 years worth of data, not just over about 10 trades on a daily chart. But the methodology that I've back tested with the pivot points works on all time frames. It's just the reward to risk is what sets it apart from being profitable or non-profitable, which is why I don't drop any lower really than the daily or even a weekly 240. But when I see orders like this, if I'm about, then I will use the 60-minute on that daily. Sometimes you have to, and I've said this in other videos, the structure of price means you might have to use the 240-minute with the daily because of the structure of price. If it's very scrappy on the 60-minute chart, you have to sort of understand that, and with practice you become confident at knowing which time frames go together. But as a rule of thumb, monthly daily, weekly 240 and daily 60. Okay, so with that said, let's just scan through some of the pairs, and I'm not going to put the CCI in all of these now, but I'm just going to look for some other setups. So on this monthly, as an example, I'll be looking for some levels. So what I would do is on this monthly chart, draw in a line. I try to make it as close as I can, these dots together, because when we drop down to the daily, you see it very big. Don't grab it from here. Make sure you get the middle area of those 3 boxes, otherwise you'll change the angle. Okay, and I reduce it down a little bit, and I know I've got the extreme, so I don't even bother drawing these in normally because I know it's the extreme. And then you've got this kind of level right here, and this level's actually been, I'm just going to do it like this, because that pivot point, this level's already kind of been touched, so I'm not really interested in this level. The extreme, it doesn't matter being touched or not, it's the extreme, it's a higher time frame level, okay, so I'm not worried. But this is an area that looks very, very nice. Again, using the daily, I can't look at the time it's created so much, I'm just more interested in the strong move and taking out a pivot point. From here, there wasn't such a strong move, everything's based. This might be a weekly level, for example, But at the moment, these are the daily levels that I'm drawing on this monthly chart. And we've also got one just here, just inside. I would drill this down now to the low point of that level right here. Okay, and you could do it like that, so you make sure you get the one moment, make sure you get the extreme of that area. So you have to be into that area before I would short. If it stops before that, I'm not interested. I expect price might push a bit higher. But that would be could you imagine having a set and forget there? Very low risk. You might have about 30-40 pips worth of risk to go for a target that might be 300 or more. But they're the levels. So if I come back out to the monthly and drill that down, because it's stupid wick on this particular broker, and enlarge that so we can start to see the levels now on a daily. And again on the 240 I could do the same, but what we've had a close using the analysis. We've got a pivot point here, so this level is no longer. I haven't got a level on the weekly. If I go to the daily, I've actually got a short in here, and what it was is I had this daily level closed. It was in sync with the weekly direction. I've got a long because of the big range, so I used divergence down here to enter. I spoke about that on previous videos. I'm not going to go into that, but price might not, because we've got some very nice levels on the way down. The weekly is undecided at the moment, and I'm in sync with that higher time frame, that monthly. So I saw this level here, and I'm going to drill that down and show you the entry that I had and why I took it. If I drop down to the 60, it was pretty much, in fact I'll draw the level in on this daily. If you draw the lines too close, that happens. You have to just delete it, come away a little bit, stay away from any pivot points, any candles. I was looking at the extreme anyway, but what we had, and I didn't have a set and forget there, we had this long candle. It didn't close below. Okay, when I was watching, price was bouncing, and I took an order in this area. I think it was this right here. I'm going to enlarge or highlight the level on the 60-minute. So if you look at price kept coming up, following the rules. I had no close below any of the pivots until this point, and then price, I had an order right on that level. Price entered, but I put my stop above this height, 20 pips above. I think it's about 18, it should be a few more pips above that. I need to adjust that slightly higher. That's, oh no, I think it's been adjusted because we've created pivot points, I think, since then. Yeah, so that I've got to move that back down now. So what's happened is price dropped. It didn't work because it rallied, but it didn't stop me out because I had my stop 20 pips above where it is now, up here. And since then we had more pivot points created, more pivot points, and we had this close. I'm going to redraw this one below this pivot point. So this was a new level on the I just want to make sure these boxes close on the 60-minute, but I'm not interested in taking that again now because we're outside of this, but I'm already in it. This could be the fake out, you know, where the banks and institutions stop people out trying to follow supply and demand. So you've got to make sure you're clever. Maybe this won't work. Maybe this is an indication that I'm in the wrong area and price is going to continue rallying following my original buy on this Aussie Swiss. Okay, so I'm kind of hedging on this Aussie Swiss now, but this is the area that I'm interested in doing it, not just anywhere. Since then, price, look, we've created some more pivot lows and pivot highs. We didn't get any closes until here. This means we've got this little level that was in control, but I wouldn't be shorting. Sorry, I wouldn't be buying in this area when we're trying to short. So it didn't work. We haven't got quite a close below, but basically there is no levels now. So the price is indecisive on this 60-minute, but I'm in the daily area that I wanted to short with a spike above. Now, if my range-bound monthly trade is going to work, this is going to get stopped out. I'm quite happy to get stopped out. If it doesn't, then I'm going to be locking in pretty much this £11. If it drops, it means I've not lost any money. In fact, if it comes down and gets stopped out, I'm still in profit by about £11. Okay, and then I can continue with the sync of the monthly and see if the weekly produces new levels, and so on. Right, Aussie yen. I'm going to move quick now, looking at the pairs. I'm not going to draw the levels in. You can do that yourself. First of all, Aussie yen, price has already reacted and moved down, but we have got this weekly level, which is a counter trend from this monthly. But having said that, it's a weekly level. So I need to keep an eye on 240 minute with divergence. And if I enlarge that, price has come in. There's nothing. This is the level right here. The strong move. Price did take it out because remember there's a pivot. There's a pivot point here, but there's also a pivot there, pivot here. Where do you put your stop? The only way you can do that is putting your stop right away down here, or waiting for price to come into this area, give us some form of divergence, which hasn't happened yet, and then take the candle that closes. So if we had divergence here, I would have had a buy there and stop either below this 20 pips or below the very low for safety. It depends on the reward to risk and how you want to look at it. Since then, price has gone up. We've not really created any demand level yet, so there's no. It's indecisive. We've not created any more supply. You know, price has dropped here, not closed below this pivot. It's telling us price is now indecisive. It could go. So I would wait now for a new set of divergence. And you see, this is the kind of low area right here. This bit here is just either side of this candles. So that means if we produce divergence, if it drops below this area, produces divergence here, then that may well be an entry. So just bear that in mind, but I don't think I'm going to take it because the reward to risk is not as good as I would like. Okay, so that's a bit of a detailed explanation on this one. You could look at the daily and think, hold on, this might not work. Now bearing in mind, if I'm in a weekly level, I will not trade this daily level here, but this is a valid daily level. It could work as a day trade and that as well, but when I'm in higher time frame areas like a weekly demand or monthly supply, a valid one that I've mapped out, not just any like area, but a valid one, I'm not going to try and short this area. The probability of it reaching this target area is lower, or much lower. Okay, so it's a filter, but if we have a look at that daily into a 60 and see what happened on the we had a level, nice level here. I'm just going to highlight that level like this. You can see the little spikes above, but you can see how it held, similar to what that other trade I'm doing on the daily. But whether it's going to work, because where we are in the bigger time frame. But did we have any divergence? When we come up, no divergence. As price left, you could have sold. Profit isn't there, so I wouldn't have done that. But if you did have divergence here, you could take another entry up here if price retraced. That's what I'm trying to say on the other video. Let's have a look here. Higher high pivot. Already a slightly bit of divergence from there, a little pivot point to another pivot point right here. Okay, this is a pivot and a pivot. Okay, and divergence, that's another valid. Now imagine if you had that, and by the way, you want price to close as a red candle if you're looking to short. You can have the green if as long as it's closed more than 50% of that candle range. You know, you need a rule of thumb there as well. Try and stick to red candles. It's a safe bet. Now if I would have had a 13, let's say I had a 20 pip, a 35 pip risk, and I was going for a target of around about 65, it's only going to give me just under a 2 to 1. Okay, the reward to risk is still not there for that. Let me just have a little look. From that pivot to no divergence there, but we have created, we did have a level here, by the way. So just say price dropped, you weren't using divergence and you wanted to trade that level there, and you had your stop 20 pips above, or let's say only 12 pips above this 20, that would be a 32. There's a high chance you would have been stopped out with the spread. Okay, it didn't quite reach there, but you would have been stopped out. But there's another level created and price is coming back into it. There's a counter trend level. But like I said, where it is on the big picture, not the best example, so I wouldn't even be trading that, but it still works. You know, it's still an area that has got supply. Aussie New Zealand. Now price took this pivot, so there was no higher time frame supply demand that I would sort of lean on, but the weekly did have demand, close above here. Price has pulled down. I was looking for divergence on the 240 and into some area of demand. Let's enlarge that. I'm going to have to come back now because this is where price has got a beautiful level down here. This is the extreme that I didn't actually put an order in. I should have had an but that would have been the extreme here. Now imagine if you had a set of look at my entry was here, confirmation, because I missed this. So I've got a 51 pip risk when I could have had right now only a not 51 pip risk when I could have had a 22 pip risk. Now if you imagine 22 and you've done 145 pips already, you had a target even there. Since then I think it may go up higher, but price is just ranged around here. It doesn't matter, you're in the trade, you either hit your target or not. So if I come back to the weekly, I've got a target up here. That's what I'm going for. So I just let it run. All these wicks at the moment are in decision on the where supply and demand is now. We've got this is still in control. The only difference is I have to reduce this level down to the nearest pivot point. So that whole area is reduced to that pivot, and therefore my stop has probably moved from below here up to this point now. So the stop has been reduced to 20 pips below this pivot. So I'm slowly managing the trade on that weekly that I'm going for. In case we produce a pivot up here and price doesn't reach a target and drops, I'm not going to lose any money then, or only make a small bit. So that's how I entered on that one. Let's continue for the next pair. Aussie dollar. Pivot point is here on that monthly. Price is dropped. There's sort of levels on top of levels here on the monthly. All of these can be taken except for this one. It hasn't created anything yet. We've got a weekly area. If I drop down quickly to the daily, this is the area that I'm interested. Obviously if price rallies a lot more, then obviously you've got the extreme, providing the rules are still valid to take that on that higher time frame monthly. It's almost like all these sort of levels on top of levels. Strong move here. So it's closing below this pivot point now. There wasn't a pivot, but this is the extreme, you see. Extreme, but there's no pivot taken out. It's probably highly unlikely at the extreme on the smaller time frame. But then this didn't really create too much, but this did right here. But where the basing area is, I would have a stop above the whole lot, but that's how the level's drawn. There's another level here, but we've already been up. It's created a whole lot of mess here. This is the strongest move down. This never closed below a pivot, by the way. This one did, so this was the stronger move for me. Price has already bounced and hit there, so maybe it wants to come up, and we'll talk more about another little level I've got in here in a moment on the daily. So if price comes into here, set and forgets at the extreme. But it's a long way to go for there. Now we've got this weekly level actually right here. Let's drop down to the 240 minute. Again, I'll put some CCI on these charts now. And we'll have a little look. Beautiful level here, but it's outside of. But it's an example of a lovely level. You probably have your stop if you was ever taking that level above this pivot point. This is the level I'm interested. If I come to looking at the times, it created London, and there's a little pivot point there before this. That's why I got my that's where my stop would be above this, by the way. And then what we've got is the absolute extreme of the area right here. In fact, best just copy one of these. So I've got my stop above that pivot, and what I've done is this area has pretty much been drilled down because of this wick. I'm being very careful. I'd rather it be above the high, if I come out of this this level here. This level needs to be dropped down like this, by the way, because it's a new level created. I've not adjusted from last week. There was a level that worked, bang, and here. The lower we go, the less chance that these might work, but again, you can't keep adding too many rules. You're going to miss some very, very nice trades. So I've got an order at the extreme on the weekly. I'm not interested in any other levels. Nothing on the daily. Daily starting to create no level at the moment. CAD Swiss. Again, this is an order on this level here on the daily. And the reason why, this is a different one, this is a good one, this might be a bit of an eye-opener. We've got nothing on the monthly. I've got no supply and demand in control. I've got no supply and demand on the weekly following my rules. However, where are we? We're quite high chart pattern wise. You know, we're quite high. Price could drop again from there. We're not down near the bottom. So generally on the chart pattern, supply and demand, if you want to look at it that way, we're high. It looks like the weekly's rolling over, so there's room for it to drop. There's room for it to drop here. So therefore, if I come onto the daily and enlarge that, you see this pivot point right here, close below. We've got a pivot point above. I've got my order at the extreme. Don't even have to worry about looking at lower time frame levels. At the extreme, I've got about a 17 pip risk for 88 pip reward. That's all I'm going to risk. And if we start to close today, this will be a pivot point here. This will get cancelled. So all I've got to do is come back after midnight today in UK, see where this candle, if it's still pushing up, I leave the order on. If it's still pushing up, I leave the order on. If it closes lower and creates a pivot point, I cancel the order. Okay, right until I get stopped out or make the trade. CAD yen, same down here, extreme. This might be an example of oh no, I've just drawn there one level in here, one line at the extreme. That's what I normally do, but this is the areas. Another level right here, by the way, close above. This could work. Let's have a look if we've got any divergence. Let's have a look. Now, bearing in mind, I like to see divergence when we're in the level, but if you're that close and you've got a really nice level, you know, again, this is where you can slightly bend, but there's no pivot point on the way down. There's nothing. So this is not a level I would even consider trading. Okay, I've now got a pivot point here. What I would like is price to base here and this CCI to move up, because then if price drops down here, there's a very good chance you're going to get divergence on the CCI, and this could work very nicely. So I'd watch this. If I miss entry, I might take it as I leave. It depends again on the reward to risk. So that is the monthly daily. It's also a 240-minute area, so I can start to map out 240-minute levels. We've got a nice level here. What time was this? It's about the New York afternoon, kind of morning to afternoon, lunchtime going in. Yeah, so it's New York lunchtime sort of area coming in. So it's not a bad level. It has closed above this pivot point up here, above here, so it's very nice. There is lots of levels below, but this is the one with the strong move after all this mess. Again, not clean, so I've took an order at the extreme. Again, let's put on some CCI here and keep an eye on what happens. Again, this is for observation each week. And if you look, we're into this monthly. I wouldn't short any daily levels, but normally if we're quite away from a monthly, as a counter trend on the monthly, if you look at it, the daily going against the monthly direction, or even the weekly, if there's profit margin to these zones, then I take it, you know, because the daily gives me the profit margin, but within movement that can happen on the higher time frames. This one, I missed the extreme of this. Don't know, by a few pips anyway before, I think so, but it's working out very nicely, but I didn't get in it. This was a level here. Again, if this level you start to buy, which is below the 115 area, was in this area, I wouldn't be looking for levels, but outside of it, yes. So anything down in here, there may well have been opportunity to go long just to trade that weekly. But if you look how messy or how sort of structured price come down into this area, and then in this area we have got the extreme. A set and forget could have happened here. These levels are not this whole area is probably a level. We've got a level touched. You know, this is quite messy here. But the strong move is really from this point. It's too high up, too close to that monthly level, the 115 that I was talking about. So let's put the divergence here, see if we've got any divergence that would have said possibly enter this. There was some divergence here, again, but look at 114.60, right close to that monthly. Personally, I wouldn't have took it. I would have wanted to take the extreme, but I would have probably even waited for divergence, and we didn't get any price. If you just waited and done the correct analysis, like looking at the higher time frames and down, you just wouldn't have traded this. It would have stopped you having a loss, or a very small one at the extreme. Euro Aussie, there's nothing to trade, no levels on either of the time frames at the moment. Euro Swiss, nothing on the higher time frame. If you look at the way price is reaching this mess up here, I wouldn't be trading the daily long either. So Euro Swiss hit the monthly level. We have got a weekly level because of this close above. So buying down here is well away from this monthly level is fine, because it might retrace up to give you profit here, which would be like, imagine price drops, gives kind of a little bit of a basing area, comes up a bit of a range in this area for before move down. So it's quite a valid area to look for a long, and I'm going to drill it down quickly. Have a look for that. Right at this beautiful 8 o'clock London level created here, very strong move. Price is still not, from these candles, quite being back there, so that's where my order is to go long. If it continues, let's have a look. There's a lot of mess in here, you see, so really just the extreme. Again, wait maybe for divergence. Divergence isn't to be an end all, by the way, but it will keep you out a lot of losing trades. And let's have a look what happened on that monthly higher time frame. Where's the strong move? Here. It's not quite there. We might be able to get another chance at shorting. My short is at the extreme. If I come back out and just draw that level in, I've got these all in on my I've got these all on my other trading account, but I will not show that. I was hacked once, and I'm not going to let that happen again. So we've got this extreme area that I've also got to set and forget on, okay, and this is a fantastic level right here. This is all scrappy, so I'll be more interested in this nice clean level. Again, let's see what's happening on the divergence. We've had a high here. Great if this can drop lower whilst this stays in this area, because if it looks like I'm going to create divergence, I might put a order on as it enters here if it's looking like it's still diverging, if that makes sense. If this pulls up to here whilst I'm up in here, I'll either put a stop order to go short here with a 20 pip stop above, or I might just short it straight away as it's in that area, depending on I might even drill down to a smaller time frame to see what's happening, like a 60-minute. You know, I use that as well as confirmation as entries. So let's keep an eye on that for observation for next week. I'm not going to do nothing on this daily. There is a level there to go long, but look where we are into the monthly level. Oh, one moment, let's put this back. There we go, monthly level. I'm not going to buy this level. Euro pound, nice weekly one up here, nothing on the monthly. I'm not sure what's going on there. Nice little level here, drop base drop. I was watching this on the market open last night while I was at work, and market spiked above, already saying, you know, nothing to do here. But I was watching this, price was already dropped down by the end of the week, so I thought if it opened in this area and I could have a stop above, I was going to do that. But I weren't going to put an order in on the market open because of the spread and everything else, and look, price has already taken this level out, so it's not a valid level. But it was nearly a good hands-on live trade yesterday, but never mind. This is just again a weekly area. Let's put the CCI on there, drop it down to 240. Let's have a little look down here. Lovely London level, look at that, amazing. There's one here. Let's just highlight this because this was a very nice level, and let's see what went wrong. You've got to look at all the things. Price dropped into it, And then in fact we was creating divergence, but what did we do? Take that level out, but it was divergence, and it was right there. There's levels on top of levels. It was a red candle though. Okay, it was closed more than 50%, but it's red. That's what you've got to be careful of. It's already spiked through. Not for me. If you take a level out, you know, it's not clean here. There's nothing clean. That's not clean divergence either. So wait for something cleaner. We've got a lower pivot here. The next pivot point, I think, may have been here. Not really divergence. So we've got this pivot here and then a pivot low. There's no divergence. So it looks like price might want to drop a little bit deeper. So I might keep an eye on that, because this is my order, but if it comes a bit deeper with some very clean divergence, I might just take that a bit early and try to ride that all the way up. Remember, the profit target is in the solid bodied candles, normally the one that's been created. If it's really wicky, I might go somewhere on this one, but not quite the extreme. So there's a nice trade. Because there's no monthly levels, we're in the middle here. The daily could be pretty much traded long from this weekly. Okay, it could be traded if you create anything. This was a daily. No, this is not. This is a 60-minute level on something. Yeah, on that was a daily level. Close below. Let me draw that in. Let's just see how that level short would have worked. Not that I would have took this one because of where we are on the weekly, but let's just have a little look. Put some CCI back on in here and come out. So price came up, very nice level here, but where we are, like I said, I wouldn't have took it. It's not even London or New York. This one is the New York afternoon. Price has come in. We've created a pivot. In fact, there is divergence here, but you can't see this very well. But if I draw on this pivot right here, and then this is a pivot high, and candle either side, there's divergence. Not the cleanest. You might have to drop to a 30 to see it, because it's a very strong sort of close gap move. So maybe just need to drop down to the 30 for this particular example. Let's get rid of these lines, and I'll use this line here. Yeah, all the divergence is taking place here, and then again more. So yeah, that was a confirmation that I would have took that. I would have just seen that anyway on the 60. That's the one, it can already see it, and you would have had an entry there. Red candle divergence as well. Stop above here, target down this area. It's only going to be like a 2-to-1 trade on this daily, unless you want to use it to get in on a bigger trend, and we'll talk more about that on other videos. So but again, I wouldn't be shorting it. Euro New Zealand daily levels in this monthly. Let's have a look at this weekly one right here. We're coming into a level, order at the extreme. I'm just going to pause a sec. Alright, so I had to pause there for a moment. Just make sure everything is good there. Yep, quite a long video. Right, so this is an entry possibly here. I was talking about if we get divergence. There isn't nothing at the moment. I'm not going to drill down to a 60 with this because there's quite a lot of pivot points here, so I'm quite happy to wait on that. But a very nice level, because it is in fact a London level leaving this area, closing above this little pivot point. Need to enlarge that a little bit. There's a pivot point here, closing above, pushing. Nice level. Keep an eye on that. If it does start to create divergence or come into that and leave, it might be worth a shot. Yeah, because we're in sync with the monthly, so it's quite an area that might bounce from here. I'm going to watch very carefully. Nothing on the daily. There's just a order is at the extreme of that weekly. So I'm going to keep an eye on that one. Euro dollar. Monthly supply level now. Sorry, weekly supply level with a 240-minute level above here, and obviously the extreme. If I just put that line right at the extreme there, where stop would have to go 20 pips above, and that's the wiggle room. Obviously, to stop above whatever you draw these levels. We've got divergence if we need to keep an eye on that. Now, this is the whole level here because of the sort of, I mean, in fact, it's almost like this, to be honest. You know, we're pretty much in it. So I'm not going to be going long at this daily level. You know, we're kind of in the middle of this crap on the monthly, so I wouldn't trade the daily. But this pound yen, if we create a daily up here, it's possible it wants to come back down. Looking at the sideway action on the monthly, we've got levels down here. We're not in a weekly level, so have we created a daily? Not really. I'm looking for the close below. This candle needs to close down here. Remember, there's a gap down. We look at that in detail. If it closes below this area, if we start to close or below this pivot now, because this kind of wick took this out, we need to really close below this area, then we'd have a daily level. So let's just kind of look. If that does happen, let's have a little look and see what we got on the 60-minute. I better come back out and draw these levels like this. Come down to the 60. Straight away, I'm just going to draw these in. I'm not even looking at the time right this moment. And then we've got the extreme. It looks quite nice here. There's even this level right here, where there's a gap down, which is the strongest imbalance of supply and demand. But price has already been in there. But let's just have a look, and it's just outside the level. This was obviously the market open. This was the New York lunchtime, and this was kind of London late morning. So yeah, better levels above, and CCI is already on, so we just have to wait till price reaches up there. Might be a nice shorting opportunity. And what would happen then is you can have two targets. This is why you can have the target. As an example, if I put this to the daily, sorry, put this back to the weekly, come here. If we did, because a solid body candle, you can have target 1 here as an example, and then on this weekly, you could have another target above this pivot here. So you might stretch it a little bit further. So if we look at the 1445.84, you're looking at that sort of area. Two targets before or you just manage it in case you might get a bit more out of it and you want to trail it. The thing is, when you trail it, if price does come out and stop you out, you can sometimes get less than that. Now if we think about this, if you get in at this area, let's say a 40 odd pip stop, you take one target here, it's not even a 1 to, it's just over a 1-to-1, it's not really worth it. I'd want to get in up here, up in this region. If I got in up here with a 50 pip stop, I could take half my position up at 190 odd pips, almost a 4-to-1. It would be a 2-to-1 already because I'm taking half a position. If I take the other half a position here at 280, then I'm looking at a 3-to-1 there. So I'm looking at overall a 5-to-1 trade for those two targets, yeah, or just go for a 4-to-1 and take it off here. So that's the way I would look at that. The pound dollar, nothing at all except for this monthly level above, so there's room to go long if I want to use the daily. But look at this mess. I'd want to be outside of this. Something's happening here. I'd want the weekly to give me some direction now. That's what I close above or close below, and then I can start to really trade that daily. But there is an order here actually. I've got one in. I think it's a cheeky little one because of you see where we are in the weekly. Old what was demand level has now moved up to here, because this area is still demand until taken out, but where we're closer to this wick, we're in this area, original demand level, this whole candle. You can see I've got an order on this daily now. I'm quite happy to take a little shot, but just to here, not to ride it up any higher. So let's have a look at that daily, what I've done. I'm not going to draw it in, I'm just going to show you the level. Right at the bottom here, we're looking at a New York session morning, just starting into the afternoon, and a strong move up. So I've got an order at the extreme, but it's a very good reward to risk. This is why I like this one. If I get in there at 25 pips, then I'm looking at 160. It's going to be a massive reward to risk based if I can get in down here, okay, at these extreme areas. It might not reach that far. Again, look for divergence. It might give me a nice reward to risk. So that's why I'm taking that one, the reward to risk. New Zealand dollar levels above here in the 240 on the daily, the 240, and if we come to here, this is now gone. This daily level, we've actually, have we created any? No, this might still be valid. Just want to see what this high is now. See if this level's still valid. High 65304. 653. Yeah, that's higher. That's alright. It's still valid. There is no pivot point above yet created, so therefore we can trade this level. It's in direction. I'm going to have a look. Actually, it could be some very nice levels in here on the 60. Let's have a quick look. Very scrappy indeed. Just the extreme I would take on that. That's just the extreme. That's why I've done that. Order at the extreme because it's very scrappy. Also keep an eye level here on the 240, actually pointing that one out. Put the CCI on here. I'll just drill that down in like this. Lovely level here with a strong close below. This is what I'm probably keeping an eye on. It's just outside though of that level, so that's why I'm looking at that. Nice drill down into here, get some divergence, leave that very low risk. And if it goes higher, I'm going to leave it to that upper level on the on the daily chart. And we've got 240. Nothing on the dollar CAD really that I'm interested in, and there's nothing on the, yes there is on the dollar Swiss, which I'm just going to show you the dollar Swiss one, the monthly, daily levels, two levels. Let's just have a look. There might be a, is that a valid level? Yep, that's what I'm already in. This one here has made entry. It's up 350. That was from last week. Some more levels were created. There's a pivot point here, so there's a daily level. So on this daily level, there is plenty of strong moves where prices actually come up and touched and bounced. Divergence right here. If we look here, pivot point, and divergence. So there's a good example of these levels with a strong move when you go and count the trend and you use divergence to get in. So I just want to point that one out. So I'm shorting that dollar Swiss, and yeah, level worked quite nicely. You can even look at the 240. Very nice level. Let's have a look when that was created. Yeah, London, New York. New York pushed it down. That was all spoken last week's video. Dollar yen, coming into a nice daily level here. There's a weekly level. We've got order at the extreme. You can see I've not drawn the lines. I've got an order at the extreme of the monthly here, which is the daily zone. But let's look at the daily level. You can see it here. I've drawn it on this chart, but I'm going to put them all over here. Come into, have I got divergence? Possibly, actually. Possibly happening. Very small. There's a pivot. We're hitting that level with divergence. This is what I'm perfect live example of what I'm talking about. Okay, so if price pushes a bit deeper into this level now, and I've still got divergence, I'm going to put a stop order to leave there, or maybe just trade it. But I just need my, I just want to be a bit deeper. I want a lower risk. That's all, from there to there. You see, I just want to be into here, but it's not the greatest if this was right back here, I'd probably put a set and forget in here, but it's not. There's a chance that this pushes down and this pushes lower as well, so I'm not quite there with the daily divergence for that, if that makes sense. If we look at the weekly one, enlarge this, and let's see if I can draw any other levels on the 240. So much going on here. There's so much going on. No, I'm not interested at all. I'd rather wait for the price to reach this lower level. I'll put the old divergence back on here, the commodity channel index. No divergence anyway on that 240, not that I would want to take it. And that's it, guys. That is this week's market analysis with very detailed counter trend supply and demand levels, divergence, the whole thing coming together, trying to build up that methodology of everything kind of being either in sync, and if it's out of sync you need profit margin, and the rationale behind the reward to risk and the profit margin over time. And that's it, guys. Thanks for watching. Safe trading. Give us a thumbs up.